Perth has more than doubled in value in some areas, even tripled in others. So why am I seeing so many of my wealthiest clients start to sell up in Perth? In this episode, I'm going to open up why so many investors are selling in Perth, what this means for you as a property investor, and should you be taking any action?
Everything school should have taught you in one place. With a property portfolio of over 17 million and an accountancy firm of over 16,000 clients, as well as being an accountant to some of the wealthiest people in Australia, Jeremy Iannuzelli will be sharing his lessons on everything school should have taught you so you can build the life you want.
I just want to go through my own personal interest in this particular topic. Now, again, for most of you, you know that I am an accountant and I do manage a large number of property investors here in this country in Australia and obviously expats abroad as well. Perth, without a doubt, was the flavour of the property market during the 2020s all the way through till probably mid-2024. But I've started to see a change. Now, I invested in Perth in late 2019 at far drastically lower prices than people were buying in 2022. But for me, my Perth portfolio was always going to be transactional in nature. And for a number of reasons, I made that decision. The first being, it's about 4 to 5 hours away on a plane. So it's very difficult for me to get to inspect the property and also further to do any works. Now, anybody that knows me, and again, if you've been listening to my channel long term, I like to be very hands-on with my property portfolio, treating each property as a business. I haven't necessarily got all the systems and procedures in place to have my eyes and ears, my arms and legs in every specific location at once, but being very active, I do like to get there at least once or twice per year to be able just to see how the property's performing. That was one of the reasons why I chose it to be very transactional. The second being very much on the historical data. I've seen Perth over my career as an accountant and also managing people's taxes go in very short and sharp cycles with very long periods of stagnation or even potential decline in between. My first recollection of Perth was back in 2007. I saw that whole state go through a huge boom during the FIFO, which is fly in, fly out workers, and that was going through a huge mining boom off the back of the China resource boom as well. I saw Perth prices triple in the space of about 4 years, from 2007 through to 2010, 2011. And then I saw a very sharp decline. As the eastern seaboard, specifically in that particular time, it was Victoria and New South Wales, heavily growing in price. I started to see a lot of investors move their money out of WA and into the eastern seaboard property market. I saw mining sector substantially slow down. I saw fly-in, fly-out workers at that stage getting $150,000 to $180,000 a year, which was substantially good money. In retrospect, putting it in today's dollars, like $300,000, $350,000 per year, unfortunately losing their jobs overnight, getting told, hey, we're downsizing, we're just going to stay to our normal long-term local team, as opposed to spend all that money to fly you in and fly you back out. So we saw a bit of a cramp in the WA market. I saw prices actually halve in the space of a year, and I saw properties being vacant for longer than 6 months. And we're talking in areas which were relatively close to the Perth CBD, and I saw a big glut in the market in the Perth CBD itself. I saw units drop by more than 50%, houses take longer than 12 months to sell, and properties again remaining vacant for quite a period of time. So for me, seeing that historical data and seeing that Perth market go through 4 years of boom, does it sound familiar if you invested in 2020, and then at 1 or 2 years of decline with about 5 to 10 years of stagnation, depending on which end of the coin you look at, for me, Perth was always going to be a market to get in, get my cookies and get out. Now, I have done that with a couple of my properties in Perth. I've got in at the right time and been able to liquidate. Not, I believe, at the right time. I did sell some of them, I would say, a little bit too early and left some money on the table. But with that profit, I was able to move into, I believe, more blue chip markets, closer to home, and able for me to do the repairs and maintenance and inspect them more regularly without having to spend or lose a whole or 2 days inspecting the property. Now, coming back to what's happening in the Perth market, I'm starting to see a lot of my clients who bought during the 2020 through to 2023 environment bought at 2.5%-3% interest rates, where they're holding these properties with a bit of passive income, or if they were losing, only losing by a little bit. They absorbed and understood that the real estate agent fees in that particular case were 10%. They understood that insurance was quite high, and they understood that council rates and also water rates were typically higher than the areas that they invested in the past. So they're wearing that. Everyone's happy to wear a bit of cost when interest rates are quite low, and also when the market's booming and growing. But what I've seen and what I'm starting to see is investors who have held these properties now for 4 years, they've doubled their money, in some cases tripled their money, are starting to see their properties dilapidating, which means that the repairs and maintenance costs are becoming a lot higher. Their insurance is now out of that honeymoon period and it's going up quite substantially. Their property manager, they're starting to feel the pain of what 10% real estate agency fees feel like from a management perspective. Accompany that with higher than longer interest rates, higher and longer than even I expected, that's starting to really bite in their bottom line. People's savings and their cash buffers, not all, are starting to diminish, and we've seen that in a lot of the media articles, that the savings rate and the savings amount are starting to diminish over the last 12 months as people have started to really bite into their savings to facilitate the holding of their own home, living costs or cost of living pressures. So people are starting to say, hey, I've now doubled my money in this particular property. It's costing me $15,000 to $20,000 a year to hold it. It's in a lower socioeconomic area, and it's about time that I move it on. Cost of living starting to bite, and I want to work towards paying down my own home. So I'm starting to see more properties go on the market. In fact, speaking with a client no more than a couple of weeks ago, dated from this particular YouTube video or iTunes or Spotify, depending where you're listening, they put their property in their market expecting a flurry of people to purchase it. They were expecting in the mid-sevens, purchasing from mid to low fives. And in fact, it went through a full 6-week campaign with lowball offers and offers that were so out of this world, with 6 months extended settlement times, asking for all these particular discounts, that my client actually got discouraged and pulled the property from the market altogether. Now, if this property was to sell, say 12 months ago, I believe the real value of this property would have been in the low eights. So you can see now that there's a shift in the market. There's a lot of investors which are now starting to look at the northern parts of Queensland, and even now starting to look at Victoria as a state of opportunity. And what that means is when there's a huge amount of investor activity, and again, this is my personal experience as being an investor and managing a lot of clients who are property investors, when I'm starting to see a herd or a drive of people move to certain particular areas in certain particular states, led by buyers agents or property forums, you start to see the flurry, you start to see the heat come out of a lot of these markets. Now, there's a lot of property specialists out there that are still trying to prop up the market, saying there's going to be a lot of growth there. But if you're a property investor, it is so hard and it's not palatable to see that you're buying a property that's more than doubled in the space of 4 years. So you tend to not want to spend that money. You're really relying on the owner-occupied market to come in and buy your property if you've held that as an investor. So we're starting to see the number of days in WA, in my personal opinion, pick up from the chats that I'm having with clients and also the chats that I'm having with real estate agents, people I've known there for a number of years. They're starting to say they're not getting anywhere near the level of inquiry level that it was before. Although, be it, that inquiry level that we're having in the last 2 years in WA was just astronomical. I, as an investor, I've never seen a property market that hot in my life, and I've been investing for the better part of 15 years. So seeing all that taper off means that WA might be coming back to a normal market. And if you've got a number of investors who all invested there at the same time, the theory and chances of probability is that they're all going to be selling at the same time as well. Now, if you've got a lot of those people all selling at the same time, because again, their prices have doubled, if not tripled, and the property's not making them $5,000 a year, it's actually costing them $10,000 to $15,000 a year, then the choice becomes a little bit simple. It's now time to sell. Now, I, as an investor, I always look at a reversion back to the mean, which means the average. Now, if the average rate of growth for a property is anywhere between, say, 5 to 7% per annum, and you've seen a property market in that space more than double, which means 100% return in the space of 4 years, that's arguably, say, 25% per annum, that means somewhere along the line, there's going to be a reversion back to the mean. Now, that reversion means that it could have happened in the past with all those years of stagnation and the growth we've seen as a bit of a catch-up, or it could be that it will follow the same suit from a historical point of view and from a cycle point of view, that we may have reached the end of the cycle in that particular market. I'm noticing a lot more buyers agents that I deal with as an accountant and have many mutual clients with are also saying that the Perth market is now overpriced and the prices compared to yields are not palatable, not attractive, and not making sense from a financial perspective. So if you've got a huge amount of the market that drove those people there, being buyers agents and property forums and investors alike, and now they're starting to look at other markets, it's very simple as an investor. Don't try to time or pick the next market. Sometimes it's a really good thing to follow the herd. And if you can be in the front end or at the start of that herd, then it ensures a bit of growth as a large portion of those people start to adopt that area and adapt to that area and then partake in the purchasing as well. So Perth, from my perspective, I'm definitely starting to see it cool down. I'm starting to see a lot more of my clients looking to sell properties in that particular area. Again, just speaking with them, a lot of the reasoning behind why they're looking to sell there is, Jeremy, it's more than doubled in value and it's now costing me $15,000 a year to keep. It's a very old property and it's up for a lot of repairs and maintenance, and I'm sick and tired of paying all the higher costs. The insurance is going up, agent fees and all the other things. So they're looking at it as an opportunity to sell down, move that money potentially into other markets, or simply use it to pay down the debt of their own home. Because in the end, we're investing in property not just because we want to tell our friends at the barbecue that we've got 10 properties. We're investing in properties to make money. We're investing in properties to satisfy that commitment we've made towards our goals and eventually pay down our home and have a successful retirement. And if you've got a property that's done that well in such a short period of time, and you've got another place you can put it to maybe obtain half or even similar results, it's a no-brainer in most circumstances. That's my personal opinion anyways. So one of the biggest things you're probably thinking is, well, should I be taking action? Is there something I should be doing? It's all based upon your own personal circumstances and what you believe in the area that you've bought in and what you think it will be able to do. But I would definitely say that you as an investor, if you've invested into the Perth market, you should be often revisiting what properties are coming on the market, how many listings are available, how long those listings have been there for. Yes, we're all hearing about there's a significant shortage of buildings, there's a significant shortage of properties being built, but that was on the back of 600, 700,000 migrants coming into the country each year over the last couple of years. Since we've got an election coming up and Mr. Albanese hasn't, at the date of this particular recording, hasn't suggested a particular date, but all circumstances it could be definitely, maybe May after the budget, or it even could be called November, depending on when he wants to call the election time. But nevertheless, he's reacted to a lot of the commentary that us as taxpayers and voters have said is that, hey, control the migration levels because we can't afford to build buildings to house these particular people coming into the country. So that's going to slow down things a little bit as well. We may not need as many buildings as is suggested. Nevertheless, we need a huge amount of homes. That's the only way to curb prices and bring it back to a more level playing field, but maybe not as many as we forecasted. So should you be taking action, you need to research that area, look at the listings, look how long the listings are there, go and actually visit the property itself, have a review of the condition of the property. If you know there's tens of thousands of dollars worth of work that you need to do just to bring it up to a livable standard, not necessarily creating value, because nobody cares about if you've repatched the gutters or fixed the roof. They expect that when they're buying a property. Then you should definitely be reviewing and considering that, is this property long-term in my portfolio, or is there a better place to put that money to achieve a greater result? So spend the time, do due diligence, speak to multiple agents, get a feel what's happening, speak to other people in forums that may have properties in that same area, ask them what their feelings are, not necessarily following them, but getting a general consensus. Get an understanding from your property consultant, which may be your property manager. Have a look at what's happening with the rents, how many days properties are available on the market to rent for, what's the vacancy rate, is it increasing? Because you'll often find when that data gets posted by CoreLogic or other regulatory institutions, you'll find that there's often a significant lag. There's no better information than from the people with boots on the ground, the people that are working in the mud every day, day in, day out. So should you take action? I think once you do a lot of your research and due diligence, know there's a place maybe to put that profit if you have made profit, and then that's when you can start to make the decisions. Talk to your broker, talk to your accountant, talk to your buyer's agent if you used one. They'll be the best people to be able to give you a little bit of a feel of what they're seeing. Not necessarily will it be advice, but more so just war stories. What are they seeing from their clients? Where are people moving their money? And then you can start to form your own opinion about what you do with your property. Now, that's a little bit of a wrap up of what my personal experience is with the Perth market and where I'm seeing people leaving the property market at the moment. Again, it is my personal experience. It is not advice. I'm not necessarily saying that the market there is going to tank. In fact, it may still be buoyant for some time. But if you've really enjoyed the content of this particular episode and now you know where potentially people are leaving, our next episode is where I'm going to be sharing with you about where people are buying and the trend that I'm seeing across my client portfolio of dealing with a significant and large amount of property investors. I'm starting to see where they're buying and where they're starting to move their money in 2025. To make sure you don't miss that episode, make sure you smash that subscribe button below and don't forget to follow us on iTunes and Spotify. I'm Jeremy Iannuzelli and this is what school should have taught you.